US President Joe Biden as well, talking about how there is no fear of a debt default, saying that they will come together because there's no alternative. And this is he said this along with the House Speaker as well as the President's remarks. And clearly it seems like there's some light at the end of the tunnel with those comments coming in that debt talks have moved forward and there will be a deal by the end of this week. Let's listen in to what the President, Joe Biden, had to say. And we also spoke with some top global voices.
I'm confident that we'll get the agreement on the budget, that America will not default. And every leader in the room understands the consequences if we fail to pay our bills. And it would be catastrophic for the American economy and the American people if we didn't pay our bills. I made clear that, and I'll say it again, America is not a deadbeat nation. We pay our bills. The nation has never defaulted on its debt, and it never will. And we're going to continue these discussions with congressional leaders in the coming days until we reach an agreement, and I'll have more to say about that on Sunday.
This is all about the debt ceiling negotiation. There was an announcement by Western Alliance Bank that their deposits had grown, and we saw a significant rally in financials in the US overnight. So if you look at the main financial ETFs, they were up between 2 and 3%. So I think that was probably the bigger contributor to market performance than the president saying that they'll come to a deal. Because remember, we're talking about coming to a deal. We don't have a deal yet. So I would suggest that the risk-on rally had more to do with financials than the debt deal. If we can reduce the stress within financials, both in Europe and in the United States, then I think you could get a broadening of the move that we've seen in the US market and the European market. So it's been European cyclicals that have moved, and in US you've had some of the major stocks such as Meta, Google, Amazon, Nvidia, etc., that have been driving the market. I think if we can see the market in the US broadening so that the financials are starting to add positive attribution as opposed to being significant declines year to date, then that would be good for maintaining the broad rally that we're seeing in developed markets year to date.